Greetings, everyone. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. We're a unique firm that we have a trading software, and what's unique about our firm is that I'm not only the creator of the software, I'm the educator of the software, and I've been trading this software for many years. So who better to teach you how to use this software than me? A brief bio. Why should you take the time to attend today's webinar and listen to yours truly? Just briefly, I've been a professional trader for 20 plus years. I'm considered a technical analysis expert. I'm the creator of a one-of-a-kind, state-of-the-art custom software. We founded GPA Trading Services 8 years ago in the year 2010. We've been educating thousands of students over the past 10 plus years. I've conducted numerous live events, speaking engagements, platinum program, which included a lot of live events around the globe. We also offer one-on-one coaching and mentorships. And basically, we've seen it all and done it all. If you haven't had a moment to peruse our website, this is our website, GPA Trading Services, and this is yours truly in front of my trade station, which I look at and trade every day. Just to give you an idea, we're trading multiple markets on multiple screens and multiple trading platforms. Today's topic is going to be how to master the markets utilizing the all-encompassing, state-of-the-art MPA PE3 software. Disclaimers, everyone's familiar with these, but I would like to highlight a couple of areas. That being, trading is not suitable for all people. Some markets are leveraged, and therefore it is possible to lose money deposited for a position. A person should only use funds that they can afford to lose, and that fits within their overall financial plan as developed by a qualified financial planner. We have very specific rules which include never risking more than 2% of your entire account balance on any one given trade. For options traders, never risk more than 5% of your entire account balance on any one given options trade. You should always adhere to very strict proper money management. That is very important. And finally, all information provided and this presentation is for your educational purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy or sell any specific investment. You're going to be trading at your own risk. Now, some key components when mastering the markets that you need to take in consideration. That includes support and resistance. Everyone knows support and resistance is very important, and we're going to show you why our software has built-in support and resistance. Next up is the trend direction. It's not only important to know the direction of the trend, but the momentum and how strong that trend is. And our software adheres to that as well. The key is going to be when aligning multiple time frames. We like to call that aligning the MPA PE3 cycles. As we're going to show you, the software cycles each time frame from overbought to oversold, oversold to overbought, and that process of cycling is how you align those time frames, and that gives you your highest probability outcomes. And of course, once you start to align the time frame, then we're going to go on and teach you understanding how the lower time frames cycle within the larger time frames, and we like to refer to that as called the line of progression. Now, what do we mean by aligning the time frames? What exactly do we mean? We mean by aligning the time frames, as you can see in this view, we have multiple time frames on this chart. It's the same oil, right? Same symbol, but we're looking at it on multiple time frames. And notice, as we can see here, we see the indicators are in overbought territory. Our trend momentum's in overbought territory, and we did this on multiple time frames as this was setting up for a massive move lower on oil. And you can see not only on the monthly, but the weekly as well was deeply overbought, ready to turn over, and of course the daily. So this is what we mean by aligning the time frames. Here's an example of not only aligning the time frames, but what we mean by following the line of progression. And the line of progression is, as stated, that the lower time frames tend to cycle within the larger time frames, and they exhibit very specific behavior. So here's another shot of oil that was in that monthly turning over, weekly turning over, daily turning over. So all the time frames were aligned. And now we're going to show you how the software stair steps in a downtrend. Like most would say, you want to sell your rally in a downtrend. Well, this software tells you exactly when you should be selling, and trend continuation moves based on the direction of the higher time frame, while the lower time frames exhibits this very specific behavior. We like to call this slingshotting, where our indicator comes from oversold, depressurizes, to then slingshot lower and lower. And you'll notice I just illustrate this over and over and over, but this process is expected. We anticipate it in advance. That's why we call it the market price anticipator software. And we base that decision on the direction of the trend of the higher time frame and how the lower time frame cycles with the previous time frame. Then it goes against it, with it, against it, with it, against it, with it. And that's what causes this stair-stepping phenomenon. And if you think about it, price always moves in a stair-stepping affair. Whether it's a very strong downtrend or a very strong uptrend, price is always going to stair-step due to the cycling of the time frames and this phenomenon of slingshots. So I'll just simplify it for you in that the only way price can move lower is the time frames have to keep slingshotting, and the only way we move higher is price will start slingshotting as well. So slingshots are an intricate part of price movement, as we will continue to reveal to you. Here's another example of following the line of progression. This time it's on a currency pair. We trade all markets, so we'll have a little bit for everyone, no matter what you're trading. Again, here we see a monthly that's oversold, starting to turn up. Our trend momentums are oversold, haven't quite turned yet, but remember the lower time frame cycle first before the higher time frame, so it's inevitably going to force this to turn back up as well. So we're expecting the pound dollar to rally, and which you can see we had alignment of the monthly oversold starting to turn up, a weekly oversold turning up, a daily oversold turning up, and a 4-hour. And you can notice this on what time frame you're on based on our little indicator. It tells you the market you're on, in this case pound dollar, the time frame you're on, and then of course the current price. But you can see these are screenshots of the same currency pair, and it shows how the time frames align and how we use that to our advantage. And remember that phenomenon, price cannot move higher without slingshot phenomenon. And when you're on a downtrend, price cannot move lower without a slingshot phenomenon. So what this is illustrating is that yes, we had a monthly, weekly, daily, and 4-hour that was oversold. It started its move higher as expected, and then the 4-hour was anticipated in advance to bring this slingshot phenomenon over and over and over. So this is how we tell our students to buy the dips in an uptrend, to buy the slingshots. And when you're in a downtrend, we tell you to sell the rallies in a downtrend based on the slingshots. And we're going to get into that in a moment. So what else do we do? Well, it's all markets. Gold, again, the same alignment. Overbought, oversold, oversold, overbought, moving into oversold, then rallying. Remember, the lower time frames play out first, then they cycle with the higher. The higher was already starting to bottom across the board, so we knew we were going to sell this temporarily, then buy it for a big cycle change and a big move higher. And that's what's illustrated by slingshotting lower first, because we were finishing this 4-hour cycle down so that it could join the daily to start moving higher. And that's exactly what you see here. All right, so let's go to the charts to give you an idea of how do we align the time frames in real time, and what do we do based on what we're seeing. Well, here's an example of the S&P 500. I know many traders out there like to trade E-minis. And I know many of them that trade it, and they get so excited when they make a point or two. They like to say, I died and went to heaven because I made a point or two on the S&P move. Well, notice, we used our software, and we have different templates for convenience of our users based on what your preferences are, but we have different templates, and this one is a simple one. We have our two main indicators, the price action indicator and our trend momentums, and it's coupled with our slingshot trade triggers. And basically it's this simple. You find a trigger, you see a hook, you go. So we did this in class day before yesterday, a live trade in class, and notice these are not a point or two. Notice over here, take profit 1 was 29.5 points. It says 295. It's a trade management system that we offer that not only allows you to manage the trade from start to finish, but it also has all of our trading methodologies built in. So remember that conversation I said, no matter how strong a trend is, price is always going to stair-step in this bouncing, stair-stepping action. What does this represent? Price moves in the direction of the higher trend, and it forces when the higher trend says up, the lower time frames are going to go up, yes, then they're going to come back down, and then they're going to start to slingshot higher and higher and higher. That's the way this works. So we knew, based on this, we were going to take this trade during live class. Our live trading classes meet 3 times a week, Tuesdays, Wednesdays, and Thursdays. We average about 8 to 10 hours per week of live instruction, where not only do I tell you what setups to look for, we place a lot of the trades together, but I go through the painstaking time to illustrate, I like to call that painting the Picasso, of what this software is going to do before it happens, so you know what to look for. And based on where we are in these cycles, we can anticipate whether the price is supposed to go higher or whether it's supposed to keep, reverse and head lower. And as the time frames continue to unfold in the same direction, we know this was going to bounce higher. And at the time, we had the 4-hour, the daily oversold, a 4-hour, a 1-hour, all were over in the same area, so we knew we were inevitably due for a bounce, the highest of probabilities. So notice, we entered this trade through the trade management system. It automatically popped in our stop loss and take profits. It automatically moves your stop loss from at risk to no risk once the first profit is taken. And you can see here we took profit 1 at 29 points. Then we took profit 2 at 50 points from the initial move that it's in. And we're currently up only 42 of those 50 points because we started to pull back a little bit. But our time frames are still up, and more importantly than a 4-hour being up is this daily is turning back up. So we're getting the agreement of the time frames. The daily's turning, the 4-hour is moving from oversold to overbought, and it's expected when it finally turns over, if the daily remains up during this period, you're going to keep buying the dips in the uptrend. But this alone right here shows you it doesn't take a whole lot to make a few dollars trading, right? Here's the S&P. This was traded from yesterday. 2 days ago. It was on Wednesday. We entered this trade and we're still running. For that reason, I expected we're probably going to go up some more. I'm really not looking for the S&P to go on and break new highs again for now. That's because we have a big reason why it's not going to go on and make new highs for now is the monthly is down. So we look at the time frames and we align them accordingly. So we knew, and I said this even months ago, a couple of months back, that the S&P, yes, it will go on to 3,000. I think the S&P will clearly go on to 3,000 and above before we're done, but we need this multi-month pullback while the time frame depressurizes. It's been overbought for years now, ever since the last market crash. And notice this slingshot phenomenon. As you got your trigger to go long, it told you along the way that, hey, we're going higher. And then the time frames did what? As expected. We knew we were in a reversal after the market crash, so we just would buy the slingshot, over and over and over and over and over, and you go, well, this is interesting. I see how you can buy the dips in an uptrend, but it's always about the cycle. So think about it in terms of this, and I'll use a little whiteboard for an illustration. All right, think about it in terms of a whiteboard, and this is what we consider our price action indicator, and this is what we consider our trend momentum indicator. And their job, as we said earlier, was to move from oversold to overbought. Then once it's overbought, it should go back to oversold. And its job is to cycle from one extreme to the other, right? This is the price action. And the trend momentum basically does the same thing. It cycles from one extreme to the other. Now, as you notice that slingshot phenomenon, there's a way we know in advance, based on the software setup, that what's it projected or anticipated to do. So in order for this cycle of, say this is a daily, and if the daily is going to cycle from this overbought level all the way down here to the oversold level, then we're going to need movement from the other time frames of cycling, right? So in order for my daily to move from overbought to oversold, we're going to need the lower time frame, the 4-hour, to exhibit very specific behavior. And now this is what the 4-hour would look like, being that we expect and look for this daily trend momentum to move from overbought to oversold, and the price action indicator to move from overbought to oversold. In order to do that, the 4-hour is going to have to exhibit this very specific behavior. First off, the 4-hour is going to have to move from overbought to oversold, and then once it moves from overbought to oversold, it's helping pull the daily down. But as the 4-hour depressurizes and starts to slingshot lower and lower and lower and lower, that's what pulls this daily down day after day after day after day after day after day. So we anticipate in advance, if the daily is going to cycle down, then the 4-hour has to cycle down. Then once it gets there, it needs to slingshot lower and lower and lower. Well, guess what, ladies and gentlemen? This works on every time frame. So if I expect the 4-hour to cycle down, my 1-hour would have to go from overbought to oversold and slingshot lower and lower. Well, if a 15-minute wants to move from overbought to oversold, then the 5-minute would need to go from overbought to oversold, and then do this process we call slingshotting. It's a proprietary setting that we have and no one else offers, this slingshot phenomenon. But what's unique about it, it works on all time frames, no matter what time frame you're talking about, and it works on all markets. So let's go back over here to the charts so we can show that live time now, and I'll erase some of my markings here. But you can see why in this S&P trade we kept slingshotting higher and higher, because the time frames were aligning and telling us to do so. In this trade we entered just the other day, I'm going to switch back to my cursor, but this other trade we entered the other day, as we were watching this, the 4-hour moved from oversold. Just one second, I'm going to change this out. Okay. All right, so the 4-hour, back to what we were saying, the 4-hour, just one second. All right, sorry about that. The 4-hour, it's a new cursor I've been using and experimenting with, and it has a couple little glitches I'm still working with. But anyway, the reason we took this trade for high probability outcome is the alignment was deeply oversold. And as it was deeply oversold on a 4-hour, a 1-hour, a 30, a 15, all time frames were aligning oversold, and we got our triggers. Well, this software is so intelligent. It's aware of its surroundings. The software knows when you're on whatever time frame you're on, and it knows where the lower time frames are located. It knows where the higher time frames are located. So this software is gradually, continually looking back at the lower time frames, and it looks at the forward to the future in the higher time frame. So this is how we anticipate the direction of the move. And based on the type of setting we have, meaning what alignment of time frames are currently aligned, you'll get different types of triggers. So it's simple. Again, it's that simple. You get a hook. Why would this pattern start to hook? Right? When you see this little turn right there. A little turn and hook right there is what we're looking for. Well, this software has been aligned with the other time frame that this will not start to turn and hook up on a 4-hour unless my 15, 30, and 1 hour already oversold, pushing higher. That's evident by not only this indicator actually hooking, but it's evident by the triggers and the hook process. Well, what I want to take a moment to show you is not only is it a 50+ point, we banked 29 points with profit 1, we banked additional 50 points with profit 2, and I'm not convinced this is over yet, but I'm not convinced it's going to go on and break new highs yet for the reasons I showed you a moment ago. The monthly is in overbought territory and it's pushing lower. We have a hook and a cross pattern. You see how it hooked here in the trend momentum cross? We call that a cross. When we're overbought and the green line crosses below the red, and for this yellow and aqua one, it's when the aqua line crosses below the yellow. So we have a hook and a cross pattern on this monthly. Well, that told me months ago that this weekly time frame, even when it was months ago, the weekly time frame was going to move from overbought toward oversold. And the trend momentums were going to move from overbought towards oversold. That's why, as my weekly is not quite finished, this cycle, I'm not convinced we're ready to break out to new highs yet. And the onus is on yet. Because I do believe the weekly is going to end up finishing this cycle down, so we're probably going to see a lot more of this up and down, sideways corrective action before we reverse and go on and break new highs. And yes, I think we have the highest probability longer term trade that the S&P will march its way back several hundred more points towards 3,000 and above, but I think we've probably got a little more downside to finish what appears to be either a wedge formation or a combination correction, but we're likely to get some more downside. So why am I still long in this trade? Right? Well, the daily is turning back over and the 4-hour is still driving higher. So that's why I'm interested in maintaining this, to allow us to try to get a few more pips. But notice the software locks in your profit, so even if it reversed, it would not take you out, but for additional profit because your stop loss is in profit. And it's on-screen programming, ladies and gentlemen, so at any point I could move my stop loss in tighter and lock it in place. So that if this reverses, it will pip me out, as we like to call it, for additional profit, that this is a no-losing trade. Not only have I made profits, right? Not only have we profited from this trade significantly, but on the last lot, we're up over $2,000 on the final single lot. And this is just not S&P. It works in all markets. So notice our pound odd trade. Our pound odd trade is in the same thing. We're up over 1,990 pips. And as you can see from our pound odd trade, we're up over 30,000 on that trade, if you're trading standard lots, of course. Those of you that are familiar with Forex, there's 3 types of lots. There's a standard lot, a micro lot, and a mini lot. And depending on how much funds you have in your account, you can trade different lots, but it does require a certain balance to trade those types of lots. So even if this was not a standard lot and it was a mini lot, you still would be well over $3,000 on a micro lot, much less a mini lot. So that's why you look at these opportunities when the higher time frames align. So what we did for everyone is we have these proprietary indicators that are unlike anything you've ever seen before. When you marry the trend momentum with built-in volume with a price action indicator with money flow built in, it sets it apart by knowing when it's going to trend. Based on the time frame cycle, this behavior of slingshotting higher, again, is distributed when what? when we know that the higher time frame is up. So why did the monthly slingshot higher? Well, in this case, that's part of the process. We noticed the monthly when it made this cycle, we took aggressive profits, and then as it started to pull back, we were actually scalping it down, but we knew based on the cycling and the time frame signs and symptoms that this was going to go higher. So that's what we've been doing. Now, why did we buy it over here? Again, the same reason. Monthly was oversold for months and months in advance, right? Many months oversold, and we started this process live in class. Again, we took this trade, and you could be up $30,000 on the 2 lots right now if you had taken this trade with us simply by aligning those time frames. And there's so many unique qualities of this time frame alignment. And I'm just going to show you one, and there's so many more. Notice when this started to rally to the swing point high there, we were starting to depressurize, but then it turned back around and engaged down on this monthly. Well, when this engaged down during these few months of price action, I said, look for this to go lower, of course, but to make a higher low, it is expected to fail. So you can go back in our recordings, which we record all of our classes, and you'll see months ago when I was talking about this, that this was going to turn and hook out, and it should do it from a higher low, and we gave targets to shoot for. Then once it turned and hooked right there back out, that's a sign the weekly is oversold, moving higher, forcing this slingshot down to disengage, as we call that. But what the unique strategy is that once that happens, the highest probability, once it turned and hooked back out, it's going to go back to the previous high and make a new high. Well, if you do the math, and this is a monthly chart, that was 1,500 pips from this high to that low when we first bought in. And I said, this is a high probability trade that will at least make 1,500 pips and should make a lot more, as my monthly is cycling from oversold towards overbought, and it's overdue to finish that cycle. So you see this money flow right here. The bias is this is going to take several months, whether it kind of stair steps, goes up, flattens out, goes up, flattens out, goes up, flattens out. But its projected path is to move in toward overbought territory over the next multiple months. So that's why I think we have the highest probability for the pound odd trade to go up thousands more pips. We just happen to be in a depressurization frame, meaning the weekly is starting to turn over. So we're not expecting this pound odd to go up here yet, right? It takes time for the cycles to play out. But the bias is with the monthly up, the weekly is supposed to do, as I showed you on that whiteboard, when a monthly trend momentum and PAI are up, that's what this red line represents. The monthly was turning and starting to go up. We would expect the weekly to exhibit specific behavior. What was that behavior? It should cycle from oversold to overbought. If it tries to engage, it should fail. And once it gets to overbought, it's expected to turn over. And you guessed it, slingshot higher, 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 and higher. And this process should continue as long as our monthly trend momentum and PAI are up. And it's still up. And someone would say, well, notice, it engaged, disengaged, right? Notice right there, it engaged, disengaged, and we did what? We went from that swing point high after it turned back up, went back to the previous swing point high and made a new high. Then we had another week, a few weeks, I should say, that pushed price lower. The weekly was overbought, moving back down. That forced the monthly to engage again. And what happened? It was expected to fail yet again. When it failed, it did what? Turned back up. But what did price do? It went back toward the previous high where it started to turn, and then went on to make a new high. So we have these throughout the time frames that engage and fail, you buy, or when they're bottoming and reversing, you buy these hooks. And this is how you get in these consistent hundreds to 1,000 pip trades. Pound CAD's about 1,000 pips, 943. We're also in a pullback. We're up over 1,200. But is it easy to see why we're expecting it to pull back and not continue higher? The gauges are telling us the time frames are overbought, starting to depressurize. But can someone right now, from what we just showed you on the previous pound odd pair, what do we expect the weekly to do based on what we're seeing? Well, we see a weekly move from oversold to overbought. That's good. What was the reason for that? The monthly turned and started to go higher, and it's still pushing toward overbought territory. And remember, what did we say? When it engages, we expect it to fail. Why? Because this is trying to engage down while the other time frames are still up. So this failed, and it reversed, and it did what? It went back to the previous high and made a new high. Well, guess what it's doing now with the new high? It's starting to engage back down. So yes, I think this is going to go much higher based on the cycles, but we're in the midst of a weekly cycling down, right? So why do we know the weekly cycling down? I have a hook and a cross pattern. And if you were listening earlier, I know it takes a little time to get used to, but once you get a hook and cross pattern, what does that tell me? The hook pattern means my daily is what? Overbought, ready to move lower, because we're talking about a weekly now. So we know the daily is going to be overbought, pushing lower. And as the hook and cross pattern continues, remember what I said earlier? When you get the hook and cross pattern, and what is the hook and cross pattern? It's when the PAI hooks, and then when the trend momentum is either the green below the red or aqua below yellow, they tend to move together, but they're different snapshots, if you will, the different time frame, so they're not in perfect harmony, but that's by design. So what do we know this is expected to do? It's expected to slingshot higher, right? Remember? Why? Because the next time frame up is still up. And you say, well, this is starting to turn down. It is, but it's going to do this scenario, engage, disengage, engage, disengage scenario, while the monthly cycles back towards overbought territory. And again, based on where this money flow is here, it's going to probably take several more months. So I say we have the highest probability not only for this to go back to the 1,200 pips we were, but reverse and go on thousands of pips higher in the coming months and months and months. So what we do in this service is we tell you when to get in trades, why to get in trades, we analyze it, we show you exactly why the software is giving that signal, and then a lot of times we do it together. But we teach you exactly everything you need to know so that when you get a hook and cross pattern, it works on all time frames, right? Well, why did this monthly turn and hook there from that slingshot down to the slingshot up? And then why did it, I'm going to put two lines, add two lines here. Here's the first one that rallied to start slingshotting lower. And I'll add a second one for visual pleasure to see when that slingshot decided to disengage and go back up. Now notice on the left side of this equation, we're going to have the weekly moving from oversold towards overbought. From this line to the second line is where the weekly is going to turn over and head back down. And then when the weekly reverses to go back up is when the monthly disengages and heads higher, right? So it's a weekly up, weekly down, weekly up. Now watch the weekly, how magical this is. Weekly up, from the left side it was moving up, then it went from overbought to oversold, moved down, and then when it forced it to disengage, it moved from oversold back towards overbought. And that's how we're able to get in these large trades, and why I still feel this is expected to force the weekly to slingshot higher. Well, notice we just did the monthly and the weekly. Well, why does a weekly slingshot start to engage? And why did the weekly decide it was going to go from overbought, turn over, and start moving lower? Right? Why did the weekly do that? Just one second. I'm going to move this back over here. Why did the weekly decide to go up and then turn over and then depressurize to slingshot higher? Well, notice what I illustrated a moment ago. The monthly was up, so the weekly went from oversold to overbought. Oversold to overbought. Then it turned over slingshot. Well, notice what the daily's forcing to do. The daily on the left side is moving higher. The daily on the between the lines is moving down, and then the daily is moving back up on the right side. So notice it affects every time frame. To the left side of the equation, the daily was moving higher. To the right side of the equation, the daily moved from overbought to oversold. And to the last portion of this, when it reversed, the daily went back from oversold back towards overbought. So I want you to keep this in mind. All time frames are the same, whether you're talking monthly to weekly, weekly to daily, daily to 4 hour, and I could continue this on forever and ever. Every time frame works the same. So why did this daily go and start pushing higher, then engage down, then push higher and engage down? Why did it do this behavior? Well, because it's supposed to, right? A daily is supposed to go from overbought to oversold, and then it's supposed to slingshot lower and lower when what? When a weekly cycle is down, right? Pretty simple. When a weekly cycle is depressurizing, the daily is supposed to go from overbought to oversold. So imagine how powerful that is. Every time I get a hook on a weekly, I know my daily 4-hour, etc. is in alignment. When I get a hook on a daily, I know my daily's getting ready because it's hooking my 4-hour, 15, 30, 1-hour, etc. oversold moving higher. When I get a hook in overbought territory, it low as a 5-minute time frame, and it starts to hook down. Then it means the 1 minute is moving from overbought toward oversold is the reason, and it's overbought moving that direction, why the 5-minute curve. So whether you're a scalper, a day trader, position trader, we have something for everyone. Let's switch gears and show some more markets. Well, here's one that we're only up 17 pips, but this was one I found off of a monthly that was starting to engage down, and a monthly engages down because you have a weekly and overbought territory moving lower, and we're in the process of this process moving lower. Well, I placed this trade in the live account during our live market, and I placed this trade knowing that it's probably going to be underwater for a while. Can anyone see why this trade, it's up right now, 18 pips, but it could be underwater for a while? Well, the weekly tells me this is going to be a great trade to the downside longer term because I have a weekly trend momentum PAI. Everybody's down, pushing lower, and recently just did what? Remember that slingshot phenomenon? That when it engages up and it fails and then disengages, it's going to go back to the point where we engaged up, which is down here. And all of this time, hundreds and hundreds of pips later, we knew it was going to go back to make the low. So why did I get in so late to the downside? I was showing as an illustration in class that this is not the time to go short right now, even though it could make a couple of pips, because the daily is oversold and it's starting to depressurize. So this will go on and go against this trade. But the point is, the higher time frames are down, right? Trend momentum PAI are down, steep slope, angle separation. The steeper the slope, the more the angle in the separation, the stronger the trend, the more the momentum. So this tells me we have a lot of momentum on the New Zealand Singapore dollar to the downside, even though I'm going to tell you this is going to start bouncing so that the daily can depressurize to slingshot lower and lower and lower, and this is going to do it again. So you see my cursor? In the coming days, this market's going to do what? Chop, 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 up and down like a pogo stick, boing, 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 sideways to higher. Now, how could I take advantage of a little up move if I realize it's going to, rally, then reverse and go lower? That is the projected path, right? It's going to go up and then slingshot back down in the coming days. And we need the 4-hour to start to what? Engage, disengage, engage, and grind its way back to overbought before I'm even interested in looking at selling this rally. I want it to chop and up and down, puree a lot of traders in here as it's going up and down, and it's going to go sideways to higher. And then when it gets up there, I can scale into this position back down. When what? Look at what we have. We have a weekly down, trend momentum PAI down, and we have a daily just starting to turn up. So yes, look for this to go chop, chop, chop sideways to higher. And I'm not concerned we're going to go a little bit underwater during that period. That's okay, because I'm showing as a principle that if you're using proper money management, it doesn't matter if I'm going to take a risk of 2% of my account balance and I place a trade with a 10 pip stop loss and it stops me out, it's a 2% loss. Well, John, what if I trade with a 10 pip? What if we do a 100 pip stop loss? Well, if I'm you're going to trade with less lots at 100 pips, but it still equals 2% of my account, then it doesn't matter. 2% is 2%. Whether I get stopped out in a trade at 10 pips or stopped on a trade at 100 pips. Well, it depends what I'm trying to accomplish in this trade. I can't put a 10 pip stop loss when the time frames are oversold, ready to bounce against me. So I did it with a longer term projection, knowing that the weekly is going to win this longer term battle as it pushes lower, and my monthly is turning over, still pushing lower. Yeah, it's oversold, and I just opened this data, so there's not a whole lot of data points, but you can see it's still oversold, pushing lower, and I have a weekly pushing lower and lower. So there's no question the higher probability trade is for this to bounce, but to slingshot lower and lower and lower, as I like to call that, stair step, stair step, stair step, stair step. So this is a great trade that will make a lot of pips to the downside in the coming days. Not day after day after day. We're about to go in the wrong direction for a few days. And then once that daily does what? Remember, what does a daily do when a weekly starts to move from overbought to oversold? In order for that to make that cycle we talked about, in order for this to turn over and make the cycle all the rest of the way, the daily has to continue to perform, moving from overbought to oversold, then start to continue to slingshot lower and lower and lower and lower and lower, right? That's the projected path. So your trade alert on this pair is to sell the daily slingshots over and over and over in the coming months, and watch how this couple of 20+ pip winning trade turns into several hundred pip winning trade, which has the potential to turn into several thousand. And as long as this weekly trend momentum and PAI are down, you're good to go with selling rallies in a downtrend. So we like to say, as long as my weekly trend momentum and PAI are down, our line of progression is to keep selling daily slingshots over and over and over, whether they go all the way back to overbought and hook down, or they slingshot lower. Either one. When a daily's ready to go back cycling in the direction of my weekly, I want a piece of it. So this is going to continue to chop, chop, chop. Again, I'm not looking to make hundreds of pips in the next few days, because the daily's oversold, starting to depressurize. And you can be rest assured this is going to chop up and down, a lot of up and a lot of down, sideways movement to upwards. Now let me show you one other technique. We like to use Fibonacci's. And we have a Fibonacci we use from the swing point high and a Fibonacci to a swing point low. So during the cycle process, my daily went from overbought to oversold, and now it's starting to hook. And how do I know this is my swing point low? Because that is the current swing point low in which we have the hook process starting, and that would be the correct swing point low. Well, the magic of the software is that whenever you get a hook and a cross pattern, we only have the earliest of stages of a hook pattern, but if this does turn in hook, then the likelihood we go up to a sweet spot location, a 38.2, a 50, and a 61.8 becomes a very high probability outcome. And I'll draw a little highlight box there. You go over here, if you don't have it, you add it through the rectangle, insert it, and I love to have my rectangle right next to my Fibo retracement indicator. So I'm going to move that rectangle right next to my Fibo, and now I can close it. Now I have this little rectangle. What do you do with that? This is the target zone for the Singapore dollar, or in this case the New Zealand Singapore dollar, to bounce to as it starts to depressurize. It's a potential target for it to make a lower high and reverse to a lower low. Well, a high affinity is if we can get the hook and a cross that it makes the sweet spot. And you'll find that will blow your mind. It's so high affinity, once you get a hook and a cross pattern, there's only one way it can't reach its destination. And that is for the daily to do what? Depressurize it and slingshot back down. And you would see it coming at you, right? We're going up for a few days. Life is good. I'm going toward my target. And all of a sudden, uh-oh, it cycles back against me. Then maybe I don't reach my target. But you'll find about 80 to 90% of the time when you get a true hook and a cross, or even more, you're going to get at least this movement. So this is why we have high probability trades. Even though it's in the wrong direction right now, I'm short. And again, not because it's going to go down further right now. It's actually going to go in the wrong direction for a few days. But I was illustrating in class that you're going to see the cycles reverse. And yeah, this could grind up and down and move a little bit lower, but the bias is this is going to go up several pips higher so that the daily can then slingshot lower. Why? weekly is down. That's simple. All I got to do is look left and right. Well, what if I was to tell you, David, that we automated all of this? Not only did I tell you our trade methodologies into this trade management system, but we incorporate all the time frames. So the trade management system knows when you want to buy a trigger to go long, when to sell a trigger, when to buy a slingshot, or when to sell a slingshot. And all that's in our customizable, 100% customizable automated trade management system that allows you to tell the system to whether you want to buy, you want to sell, what do you want to do? You want to buy triggers long, you want to sell triggers long, you want to take slingshots. Remember our slingshot phenomenon that's only available with the software? And the only way price is going to continue to move lower on this monthly and weekly down is what? The daily continues to push from overbought to oversold as it's doing, and then it's supposed to slingshot lower and lower, and that is a high probability outcome as long as this weekly stays down. So what this trade management system will do, not only is everything in here, but I can tell the New Zealand Singapore dollar trade management system here to only sell rallies. So I can allow it to go up against us, right? And then it'll ignore that the whole time. So even though I'm not in this trade, for example, and I set it in advance, and I go, I know based on my weekly and monthly down that we're going to continue to push lower on this. And I could tell it right now to sell the next daily slingshot. I'm already in it, as I told you. But what if I came to the chart right now and I say, hey man, I got a monthly down, I got a weekly down, and I have a daily that just moved from overbought to oversold. This is the behavior it is supposed to exhibit when you have that scenario of a weekly down. That's what it's done. So what's the next line of progression? The next line of progression is as the daily moves from overbought to oversold, it should slingshot lower and lower, right? Because the weekly's down. So the anticipated move in the coming weeks is for the daily to depressurize for a few days, then slingshot lower. And then the daily is going to depressurize for a few days, and then slingshot lower. And then do it again. Well, this was a deeper retracement, and the weekly turned up, so the daily went to overbought. Remember the cycle? That if I get the weekly to hook, the daily is going to move from overbought to oversold, and the weekly hook down, right? Everybody see it? The weekly hook back down. So that tells me when the weekly starts turning over, heading lower, the daily is going to make that cycle. So I knew this days in advance we were going to have that daily cycle down. So what else is new? Well, we also expect that this will go up, part of our retracement scenario, and then it's going to slingshot lower in the coming days as this daily depressurizes. Well, notice the difference in the cycle. We went through the time frame. That in order for a daily, right here, I don't know what time frame I'm on. Indicator tells you, D1, that my daily is going to start turning up because the lower time frames are pushing higher. And then the daily is going to turn back down and engage when the what? Higher time frame is down like a weekly, but then the lower time frames, my 4 hour, my 1 hour, etc., move from overbought to oversold. That forces the engagement. So what point I'm making is that the indicators are interlocked, they're coded together, they're coded to fit a Fibonacci retracement, they're coded to fit this Ichimoku chart. So it's totally different than your plain Ichimoku chart and your plain Fibonacci. It's because the timings are aligned such that when this hooks, you have a high affinity for a Fibonacci retracement. So it allows traders the ability to counter trend trade with targets, knowing that the bigger trend or the higher trend is down and that this is expected to keep slingshotting. But this is how we anticipate that in advance. And as we continue to push through the process, we notice that we have other trade. Well, this one's only up 247. It's the dollar CAD. Some traders think 247. I'd love to have a trade that's 247 trade. I say only 247 because you'll see from our successful trade history, we tend to make larger trades. That's because I am a investment trader. I like to have long-term positions, and I basically align the higher time frame. So notice every trade we got in, I told students live in class to buy the dollar CAD. It was deeply oversold to go ahead and buy it, that the daily was due to go from oversold back toward overbought. How do you know this? Because remember, the job of these indicators is to go from one extreme to the other, and the only reason why it's interrupted, where it can hang out in either overbought territory extended periods or oversold territory extended periods, via the slingshot phenomenon. So notice when it hung out and kept going lower and lower and lower, it slingshotted lower. Then when it reversed, went back to overbought, it started to slingshot higher and higher. So notice, price can't move higher without slingshotting. Price can't move lower without slingshotting. And the only way, when I'm in the midst of a Fibonacci retracement, this is what I told our students. Here's the swing point high to swing point low. We have a high affinity for the dollar CAD when it was down here at 125, 300 plus pips ago, 247 in this trade, but about 300 pips since the reversal. We said we had a high affinity to go to a 38.2, a 50, a 61.8. And look, we grinded all the way to 61.8. And I'm still thinking it's not over because the daily tried to engage down, and look at money flow, it's back up. That's telling me there's more buyers in this area than sellers, and it's still moving higher. So I expect this probably going to grind a little bit more. And notice my weekly is starting to turn up because the daily's moving from oversold towards overbought. Okay? So as long as this stays up, my daily is expected to continue to push up. So that's why I think we're going to continue to chop, chop, chop sideways to higher as the dollar CAD continues to move. This trade was placed this week as well. Well, actually late last week. So you look at the number of days since we've been in it. But this is what we do every day. We align the time frames. We show you in advance. You need to get in long because this is oversold. And even before it starts to hook. Again, what caused the daily to hook right here so we could make this trade on the dollar CAD? Well, what decided that it was going to engage, and then all of a sudden disengage and go all the way back to overbought? That's what the time frames do. As it was moved from oversold to overbought, it depressurized and went from overbought to oversold. It engaged down, then it reversed and goes all the way back. Well, why did it turn and go all the way back up? Why did the daily turn, then go all the way towards overbought? Why did the trend momentums flatten, then turn and go towards overbought? Remember what the hook pattern means when this first starts to hook. You get the little hook right there. It tells me, ladies and gentlemen, my 4 hour is going to move from oversold towards overbought. And notice, 4 hour candle, 4 hour candle, 4 hour candle. So this takes many 4 hour candles, 12 to 24 hours or longer, knowing that that little hook meant my 4 hour was going to cycle all the way to overbought. And because the daily is continuing to push higher, the 4 hour is supposed to do what? Go towards overbought, then start slingshotting higher and higher and higher and higher and higher, right? How do we anticipate that? Simply by aligning the time frames in the cycle. So this was a no-brainer. If on this chart, I don't have the little trade trigger. I have them on certain charts. So this is what I want to show you. Based on that, we have numerous templates. This is for traders' convenience. Whether you like soup to nuts or you like just the minimal indicators on a chart, there's something for everyone here within all of these different templates. And again, they're there for convenience, that all I got to do is highlight the one and I can change the template. But the reason we're expecting to see this is, look, whether I put the triggers on the chart or I don't, this one doesn't have the triggers. Or I add the triggers like Amgen. Anybody trade stocks out there? We do stocks, we do commodities, futures, ETFs, bonds. We trade everything. And look at the difference. You notice we have a large trigger here versus a smaller one there, and smaller ones here, and it's about the alignment of the time frames. So the reason we got a large trigger on this 1 hour, it's telling me in advance when I see the trigger, do I go long? And I know the trigger's on a 1 hour, then it says, okay, based on this trigger, that means my 15, 30 minute or oversold moving higher is the reason we got this to move and start to trigger. And because it's a larger trigger, it means not only is the 1 hour in agreement, but the 4 hours in agreement. So it's telling me lower and higher time frames in agreement with this move higher. So you see the trigger, you get the hook, you go long. That's simple. And notice what the 4-hour was doing. It was engaging up at the time. And why is it expected Amgen to engage higher? Well, you think this behavior of a 4-hour moving from oversold towards overbought. And if it were to engage, what do? You sell, could potentially sell the slingshot down, but it's expected to fail, so you could buy the dip. And when it fails, you do what? Expect it to go back toward the previous high. When it engages, disengage, you go back toward the previous high and make a new high. Then it turned over again and slingshotted and slingshotted and slingshotted. It's still going. Well, what is this behavior of a 4-hour moving from oversold into overbought, then slingshotting higher and higher tell us without looking? It tells me my daily's moving higher. Pretty simple. My daily's been moving higher, so the 4-hour exhibits that behavior on cue. Well, how much further is Amgen going to go? Well, the daily's still up, and it's been behaving the way it's supposed to. My 4-hour has been slingshotting higher and higher. That's what continues to push the daily higher. So yeah, there looks like some available upside still to come. And most importantly, we got the beginning of a weekly hook. What does that tell us? I want to see if you're listening. When you get a weekly hook here, that hook and cross pattern, which we hadn't quite crossed yet, but we're hooking. But the hook pattern means what? That my daily is going to move from oversold and grind its way towards overbought. So we knew Amgen was going to bounce, not only because we had a trigger telling us, hey, hey, green trigger, you want to go long, but we have the hook pattern, and we expected with the weekly hook that the daily was going to move from oversold towards overbought. So I knew days in advance when to go long based on the trigger that, hey, I go long, but I knew what to expect for days in advance that what? My weekly's hooking up, so this daily is going to move from oversold towards overbought. And yes, whether it engages, it's expected to make a low, a high, a higher low, higher high, higher low, higher high, stair-stepping. And once it finally reaches overbought, if the weekly's still going up, then this daily is going to turn over and slingshot higher and higher and higher in the coming weeks. So yeah, Amgen could go higher as long as my weekly stays up. And it's the early stages of the weekly starting to hook that we believe we're going to rally a little bit more on Amgen. But again, it doesn't matter what you're talking about, whether it's stocks, futures, commodity, ETFs, bonds. Let's switch gears again and we'll go to our Bitcoin, ETH. This is one I gave several days back, and I said Ethereum's going to move, ETH is going to move from this 350 and go to 758. More than double in price, and we pegged this in a live webinar. Why? Because we had our weekly that was deeply oversold and hadn't started turning yet. It was flattening out. So if you cut off the hook part and you see this moving lower and this moving lower, that's when we came on this trade in our class. And I said, if you're going to trade this, now would be the time to go long, even though the previous weeks have been slamming lower. So now's the time to go long. Why? Weekly's oversold, daily's oversold, 4 hours oversold, everybody's oversold and extendedly oversold. We're long overdue for the bounce. So what do? From the weekly perspective, we draw the last time we had a swing point high was up here. The current swing point low when that finally started to hook was this low. And the projected path is to go up toward this target. And let me add my cursor in this one. I just added a bunch of new platforms, as you can see. So I'm going to add my custom highlighter. That is the rectangle box. Insert it. Move it up. So I'm teaching a little MetaTrader 4 principle right now. And we move the rectangle next to my Fibonacci. So now when I shoot the targets here, this is a high probability target for ETH. I set it a couple of weeks back and look at it now. Don't you wish you'd have been there and joined our service and bought ETH? You'd be sitting pretty. So what's the likelihood? As long as this weekly keeps pushing up, we're going to go higher. And yes, I expect we're going to go to 758. We could go to 883. We might even go to 1,000 up here. Who knows? We could even break out. But it needs to what? You see this cycle of the weekly moving up? As long as it keeps going week after week after week after week after week after week after week, this is going to keep going higher. And what do we see that would confirm this weekly is going to do that? Well, we're on the lookout for the daily to exhibit the behavior it's supposed to. And what was that behavior? When the weekly hooks, the daily does what? It moves from oversold to overbought, right? And then when it turns over, it's supposed to what? Slingshot higher and higher in the coming weeks. So expect this daily will be forced to slingshot back up. Watch the cursor. It's going to turn and hook back up, and we're going to continue to grind and stair step toward these targets. Well, I set it for ETH and I set it for Bitcoin. Here's Bitcoin. Well, Bitcoin's on a different scale. It's supposed to go back to 11,185 or higher. And this is back when we were here in the 5,000 range. That's when I set it, when we bought the hook, started to trade it, right? Simply going up. Well, notice the daily starting to turn over. Yes, it's turning over, but it's turning over against a weekly turning up. So we have an option. Either the daily is going to exhibit the behavior it's supposed to, meaning it goes from oversold to overbought, then starts slingshotting higher and higher, or perhaps the daily is going to reverse, and instead of moving and slingshotting higher and higher, the daily is going to reverse and go all the way to oversold, which potentially could force the weekly to turn. But it's going to take a lot of downside pressure to force the weekly to turn. That's why all prognosis says we're going higher, and this daily will be forced to slingshot higher in the coming days. And what's the reason it's turning over like this? The 4 hours pushing down. And the reason we're bouncing again, the 4 hours pushing back up. But expect more of this sideways up and down movement, perhaps a little more in the retracement so my daily can finish forming. But then I'm going to buy the dip and look for this to not only rally, but go up a few thousand more and head towards this 11,185. All right, so it doesn't matter what you trade. We have something for everyone. All right, let's go back to the trading results. More than the obviously live trades that are ongoing I've showed you. Here's some trading results. Gold trade. Now, we don't trade gold just to make a 50-cent move, a dollar move, which, Rob, hey, man, if that's what you want to do and you want to scalp and you got a futures account and you're going to trade gold in a futures account, you can make money on a 50, 60, 70-cent dollar move, $2 move. Well, notice when we trade and we align the time frame, this is a $126 move on gold. You only need a couple of these trades in which to make your return on investment, then some. Even one of them in a lot of cases is enough. But if you have a smaller account, I don't know your financial circumstance, but those of you with smaller account, no, you're not going to make these big numbers unless you're trading the standard lots. But if you make the smaller lots, you still make what? Instead of $25,000, wouldn't you like to have $2,500? That seems reasonable on one simple trade. Well, notice, $126 move. Here's gold to the downside. We got the triggers. We're moving lower. Time frames align. We expected this to move lower, so we let the automated trade management system enter this trade for us based on the triggers. And this right here, after this long down move, is only a piece of it, but this was a $150 move. So again, the secret to big, let your winning trades run, is align the higher time frames. Well, let's continue. Here's one of our students that uses our service, and he trades in TradeStation. He uses the signal, he places the corresponding trades in his TradeStation account, and this is where he had multiple currency trades running, and as you add these up, it totals 8,600 pips and counting. Because we had our other scanners I'm about to show you, this told him the alignment of the higher time frames, like the monthly, the weeklies, etc. So it allowed him to stay in the trades, and it rallied and kept going, stair-stepping higher and increasing his value from 8,600 pips to 18,300 pips. And it was using the slice of heaven finder is the one that told him to stay in the trade. And here's that same TradeStation. Now the numbers are greatly increased to thousands, multiple thousands of pips on several trades, totaling 18,300. Again, we continue. Here's gold. Again, just illustrating this is a big trade up $110 to the upside. And another nice trade when we just trade the cycles. It doesn't matter what you believe, what you think. You use the gauge and you trade it accordingly and you'll be successful. Follow the rules. So here's the pound odd. Remember the one we're up 2,000 pips on and expect that to go to multiple thousand? Well, here's where we were down on a short trade, not down, but up on a short trade to the downside, 778 pips. Because we used the slice of heaven finder and because the higher time frames were aligned, we allowed the same trade to run. And it went from 774 to 1,274. Well, we weren't finished then because the time frames were still aligned. So it went on to run to 2,270 pips. Well, again, the monthly was still down, the weekly still had a little left in it, and we were still pushing lower. So we let it run, and it went on to a whopping 3,627 pips. All right, that's just the beginning. Here's another one. Pound CAD. That's another one we're currently long on. Why? The cycles are up, but this was a trade we traded to the downside. 3,073 pips. This is easy when you have the time frames aligned and you align the higher time frame. These types of trades are easy to come by. Here's another one. The pound yen. 3,215 pips. Simply by aligning the time frames, letting the winning trades run, and look for those particular examples, signs and symptoms, aka slingshotting lower and lower to continue. That's how you let your winning trades run in the direction of the higher time frames. And there's a couple more. This is what we like to call a breakout system. This software is so smart, it's so unique. Not only did I say it knows its lower time frames, its higher time frames, and it communicates back and forth, but you can also set this breakout strategy, and those of you that trade Forex, you can use this during the London session. If you trade stocks, you can use it during stock section in the mornings. And what it does, it allows you to preempt and set this in advance. So I can tell it, okay, after the first hour of trading, I want you to tell me, software, what my high is and what my low is. And draw these lines. That's the swing point high and the swing point low. And at the end of the hour, it sets this parameter high or low. Well, once, and this is like in advance, like an hour later, it would pop this high and low. What if I set it at 5 o'clock in the afternoon and my 1 hour high and low isn't until 9 o'clock in the next morning? Then it would just keep chugging along till it came to that time frame candle. And at the end of that designated candle, it would give you a high and a low. Well, why is a high and a low important? Well, think about it in this term. We were in a downtrend. Obviously, we're seeing price go from the upper left to the bottom right. It's in a downtrend. So not only does it give you a high and a low, but you can tell the system to, okay, if it breaks the high, I want to go long. Or if it breaks the low, I want to go short. Well, what if you're in a downtrend? You can tell it to ignore the idea it's going to rally and break the high. Just ignore it and do nothing until it reverses and comes back down and breaks the new low, then sell it. So it's completely customizable. So what did we do? We set the trend to not take the high trade. If it were to go high, it could take as long, or I can turn that off so that even if it does touch, it won't enter. It only comes down and enters short once you break the low. And notice, not a huge trade, but 272 pips. That's nothing to shy away from. And do you let it continue to run day after day after day? Sure, as long as the trend momentum in the PAI on the higher time frames is down, that's exactly what you do. So again, customizable. I could tell it to buy the dips in an uptrend, or in this case, sell the rallies in a downtrend, and I can use. Well, what else is this good for? Stock trading. You could tell it within the first hour stock if I want to know the high and the low. And a lot of people call that a breakout range. It kind of sets your high and a low for the first hour of trading. And knowing what direction my trend is in on the higher time frames would give me greater insight whether it's going to break the high or the low. But the system would allow you to tell it doesn't matter. You want to break the high, go long. It breaks the low, go short. And all that's built in automatically into the automated trade management system. Well, we're offering an MPA PE3 Master Trader program. What is that? That consists of two components. our MPA, Market Price Anticipator software, which you only see, actually had a review of only a few of the components this morning. And we have the MPA live trade classes. Again, we meet 3 times a week, and we average about 8 to 10 hours per week of live instruction. We cover all markets. I painstakingly go through the software with painting the Picasso of what the software is going to do, what it should do if it goes as expected, and what the software is going to do if it's not, and does an alternate count. So we're unique that we give you a trade recommendation to the upside, and then we'll give you a potential trade recommendation to the downside based on price action and based on what the cycles tell us. Okay? So what is included in the software? We have an MPA PE3 market scanner. Well, let me show you what the MPA PE3 market scanner looks like. This is our MPA PE3 market scanner. It allows you to input the symbol of your interest. Notice there's a little accumulation of Forex, indices, stocks, gold and silver, S&P, got a little bit of everything. So you can customize this up to about, I think, 17, 18 symbols max, because you have to have room to see. Well, why is this important? Well, notice everything and all our methodologies built into every component. So our slingshots are built into the scanner. Our hook and cross pattern, direction of the trend, is built into the scanner. The triggers are built into the scanner. Whether they're up, down, large, small, it's all there. And not only, if you look closely, it tells you all time frames from the 1 minute all the way to the monthly, the direction of each trend, how the time frames are starting to turn and reverse, or bottom and reverse and go up. You'll be able to tell based on green or red, depending on the direction of these triggers. It tells you built-in support and resistance. This is calculated each day, each month, each second, each hour, everything. As the software cycles, it builds in these support and resistance levels for you, gives you the current price, where to look for resistance and where to look for support automatically. And it'll tell you what the average daily range is, if you have a trade ongoing, what percentage of that daily range has already moved so far during that trading day, and whether you have a trade running or not. This is all at a glance, tells me everything I need to know. That's just one of our scanners, right? What's else? We have what we call a slice of heaven finder. A slice of heaven finder is this scanner. And I just turned it on prior to this engagement, and I set it to a monthly. Notice it has the pound Singapore dollar, the pound CAD, the New Zealand Singapore, starting to set up with a monthly time frame starting to turn down. We know that we're expecting this to engage, disengage on the CAD. We discussed that one. And this is why the Singapore dollar, the New Zealand Singapore dollar, is the trade I'm short, but that's going to go against us a little while. Yeah, the monthly's down, but the weekly is pushing, and we need the daily to start to depressurize to go in the direction of the weekly down. So it's part of the cycles. But this is what gives you a heads up so that we can jump on these trades that are big trades that make this hundreds to thousands of pips, right? The pound odd trade was entered based on that slice of heaven finder. The pound CAD was based on the same thing. And you trade the cycles. So it's all at a glance for your viewing pleasure. And what's the purpose? And you can change the time frames. It's all completely customizable. So why do the two scanners? Because you'll never miss the next big trade. MPA slingshot trade triggers. Again, we showed you those in different capacities. You have the option to add it to your chart as a template or not. I use it, but I don't use it on every chart for teaching purposes, because it's a lot of data that takes into consideration the slingshot trade triggers. But for an individual, I trade with it all the time in my live account, and when I'm trading, yes. But just on my demo and my class charts, I don't always have them, so I can show you what we offer. Next up is the MPA Trade Management System. That is, again, the trade management system that allows these trades to run and keeps in them. Whether it takes days, weeks, or months, it'll sit there in a pounce mode to enter the trade, or if it's already ongoing, it'll manage the trade automatically for me so I can't lose anything. Everything's on screen program. Well, Gary, what about this take profit up here? What if we decide it's going to go much higher and all I got to do is click it and move it? Or if you think it's not going to go quite that high, I can click it and move it down and lock it in. 100% on screen program, everything you need. Next up, Platinum Asia scalping system. I don't have time to show you that today, but if you're a scalper, it's a dream's delight based on the lower time frames aligning, and we give you buy and sell lines that appear on the software when it's time oversold to sell, and when it's overbought to sell it, or oversold to buy it, based on the alignment and where those levels are to enter your trades. All that's there. Also another one called the Triple P scalping system. You can use it on all time frames, so this one is not just for scalpers per se, but ladies and gentlemen, like that long trade we're in, thousands of pips, we know it's going to go against me a few hundred pips, so I'm scalping this trade to the downside for hundreds of pips, but when it reverses, I'm going to continue to let my winning trade run for thousands of pips as we already done, and it's going to continue to do so based on the cycles. Breakout trade, we briefly showed you that. You can set it as a pending order. Whether you know a certain area price is going to reverse from, I could set it in advance. When it hits it, that level, it reverses and enters a short trade. Or if it breaks a level, I could tell it to buy. I can tell it whatever I want it to do based on my input. And of course, the bracket trade we showed you a moment ago was I bracketed the high and the low, and then the trade entered based on it breaks the high or the low. And again, with the customization available, that if you're in a downtrend, you don't want to buy the move higher because it's a lot of chopping, overlapping, more so you just want to sell when it breaks the low, and you could tell the bracket trade to do that.
We have everything you could ever need. Right there.
So as you heard, we have everything you could possibly want. Now I'm going to give you a brief moment of 10 reasons why the MPAP3 software is so unique. It automatically calculates support and resistance. It automatically calculates the trend of each time frame. That is critical. Not only to know the trend, but the actual trend of each time frame is huge. It monitors and tracks time frame cycles. So the software is so aware of where the cycles are and where in relation to each other they're located. That's how it gives you the differentials of hook and cross pattern, the slingshot engaging up or down, and of course our triggers long and short. It provides consistent entries, exits, and take profit levels based on those trade triggers, the slingshots, our profit triggers, etc. The trade management system, again, is twofold. I can, if I'm looking at the chart and I see something I want to enter right away, I can instantly enter it and let it manage that trade right there from start to finish without hesitation. Or if I'm waiting for something and I want to set it in advance, like a trap. You set a trap up. Well, we're going to set the pip trap up, and you set it in advance. So if you tell it, I'm not going to do anything because we're in an uptrend on this currency pair or stock, commodity, futures, whatever, and I want to buy it because I know it's going to go higher in the coming days and weeks, so I can set this system automatically to say, don't do anything until I get a slingshot up or I get a trigger up. And then it'll ignore it for days, how long it takes for the cycle to finish. It'll absolutely stay set, ready to go until that entry criteria is met, aka to buy the slingshot, to buy the trigger, whatever I set it to. Then it'll enter it days, hours, whatever later when that entry criteria is met. As we stated at the beginning of the show, it fits any trading style. Scalper, day trader, position trader, it doesn't matter what your true trading style is. All you got to do is align the time frames. Scalpers, lower time frames, position, investment traders, higher time frames, but you get the point. The dual scanners, both the market scanner and the slice of heaven finder, you won't miss the next big trade. That 18,000 pips was from the slice of heaven finder. The 2,000 we're in now and the 1,000 on the other one, and all these trades are based on the slice of heaven finder cycling to call my attention to it so I don't miss it. This system works on over 800 symbols, so there's something for everyone. including stocks, Forex, futures, ETFs, commodities, etc., bonds, you name it, includes everything. Consistently delivers low risk, high reward, high probability trades. Now I know everyone's heard that term, low risk, high reward, high probability trade, but only the market price anticipator software is the true low risk, high reward, high probability trading system. Why? Because it gives you a very low risk of loss with a high risk of reward and a high probability of that outcome by aligning those time frames. Now, what is our special webinar attendee offer? I'm going to turn it over to my wife.
Okay, here we are. So, we do want to thank all of you for attending. And in honor of that, we're going to go over our pricing structure. Our annual subscription is $4,997. That's for this unique, state-of-the-art, customizable software. And again, during this webinar, we don't want to keep you forever, as we easily could, because Gary loves to teach and instruct, and our software has a zillion different components. But we only take time to highlight a few, but it is very in-depth and very detailed and customizable, so I don't think you've quite seen anything like it. And when you join us and delve into it, you will easily see. So the price points that we have are highly warranted, and we feel very confident and back those up. And our current annual price is $4,997. That's for the software. That's our complete program, the software and our classes, which we have a great time in our classes. We cover a wealth of information, and we do have a lot of fun. Previously in the past, we have offered this program for $35.64.
Which if amortized is only $297
right.
a month.
Which, if you amortize that over time, it's about $297 a month, which is an unbelievable deal for the complete program. But today, we would like to offer a webinar special for this live event special. So today, we put together this, we think is pretty outstanding offer. $24.97. That's for the software and the classes. But we want to do a little extra special deal for you guys. So this is very exciting. For our first subscribers, we give you an added bonus and incentive to go ahead and act, because some people dilly-dally around and then they miss out. So for those of you that are serious and interested, we really welcome you, and we encourage you to go ahead and join us. You will receive an additional year. So that's $24.97 for 2 years or 24 months, which is outrageously unbelievable deal. I mean, that's a great, great, great deal. So, for those of you that are interested and are serious about learning to trade and are tired of bouncing about, we encourage you to act. And I will go ahead and paste the link for those of you, so you can go ahead and sign up. All right? So there you have it. It's right there in the chat box. You can click on that and go ahead and sign up. We want to thank those of you that are acting. There you have it. All right? So click on the link, or you can copy and paste it into your browser. Either way, whatever you prefer, it's there for you. Okay? And now, if you have any questions, we'll take some questions. We'll go over whatever you'd like to discuss. All right? Yes, we record everything. All of our classes are recorded, so if you're unable to attend a live class, everything is recorded. So at your convenience, whenever you have time to take a look at the classes, all the educational materials, the how-to videos, we have a vast plethora of videos. Everything you would ever need is recorded for your viewing pleasure. Okay? We want to welcome those of you that are taking advantage of this offer. Thank you so much, and we look forward to seeing you in class with us on Tuesday. This works on MetaTrader platform. MetaTrader platform. You can use the signals and place your trade in NinjaTrader, as we showed a member does with his TradeStation platform. You can use the signal and place the trade in any platform you prefer. But the software runs on MetaTrader 4. And there's a zillion different brokers that offer MetaTrader 4. So you're not limited in that regard. And there's over 800 symbols to trade, more than you would ever need in a lifetime. So you're not limited. You can trade, like we said, Forex, stocks, futures, bonds, commodities. We cover it all. So you're not limited to, you know, if you only trade NinjaTrader, that's not a problem. You can place the corresponding trade off the signals, as we illustrated our student with the 18,000 pips in his TradeStation. But the software actually runs on MetaTrader 4, which is a free platform, so that you won't pay for any data fee charges or anything. All right? And we also, as I said, we want to thank you for attending. Our motto with our software is the Market Price Anticipator software empowers you to read and anticipate price any financial market on time, in time, all the time, which is critical. And what else could you ask for? Truly. And if you have any additional questions that you forgot to ask today, you can send us an email at support@gpatrading.com. We have an excellent support staff, and we have a wonderful group of traders from around the world, as illustrated via our world map, as you can see right there. And there's our email at support@gpatrading.com if you have any questions. We have an excellent support staff and technical support, so we can get you up and running right away. And you can be in class with us on Tuesday and participate in all the fun and excitement. All right? So Gary says he'd like to take it back over, but if you have any additional questions, just type them in and I'll be happy to answer those for you, okay? And thank you again for joining us. We want to wish everyone a lovely weekend. We always enjoy presenting, and we have some new people in with us, so thank you so much. And we wish all of you happy trading. Okay, so here's Gary.
All right, so as we were showing, we're proud of our service. We have over 121 countries and counting. We're proud of our service in that our members have been with us for multiple years, since day one. And think about it, guys. If it didn't work, they wouldn't be here year after year after year after year after year. You're not going to find anyone that has the patience I do to go over these trades and explain exactly why we expect this to turn and hook, why we expect when this would, if it were to hook, when it would hook, and why should it fail. Again, it's all about the cycles, the cycling time frames, the signs and symptoms. And all this has been calculated as we've been discussing. So imagine, people say, well, Gary, why are you doing $24.97 for 2 years? That's $100 amortized over 2 years, like $100 a month for this software and your 8 to 10 hours of live trading? Because we want to pay it forward. We're here to help you. And all you have to do is click on the link. You can join us in our next live class, which is Tuesday. And over the weekend, you'll have instant access to start looking at videos, download the platforms, the software, get all set up. Trish mentioned we have a world-class technical support staff. If you need assistance downloading platforms, installing software, all you have to do is ask. Number 1, world-class. So in closing, I'm going to leave you with this. Here's one of my favorite trades. And it's in the bond market. Anybody trade bonds, futures? This is the 30-year Treasury bond. And I'm going to show you the big picture from the monthly view. The monthly view is it went from overbought toward oversold. So we were selling rallies for months and months and months. And long term, we're headed to this D extension. We have an A, a B, a C, and we're working on stair-stepping lower to this D extension, which is located about 126/127 area, which happens to be the swing point low over here. And we expect that we're going to end up stair-stepping that way in the next several months. Not just days and weeks, but months, if not a few years. Why? The Fed is going to keep raising rates over the next several years, and the more you raise rates, the more it pushes price down on this chart, 30-year Treasury bond. So we've been talking about selling rallies in the downtrend for months and months and months. But what will blow your mind, ladies and gentlemen, is when this was actually months ago moving higher, we not only told them to look for the swing point high, swing point low. Remember, high affinity to go to a sweet spot location. And the only reason you would not reach the sweet spot location is for a slingshot back down, which we clearly see. But you can go back in the recordings during these months and you'll hear me say, you see this turning up, it's going to turn over and slingshot back down. And we're going to reverse and go on and make a new low. Months and months in advance, I was saying that when it reverses, you want to go to the short side and look for this to go all the way back to the previous low, and then look for new lows as we continue to stair step down. And we went on to say, in this scenario, when this started to depressurize, we were telling everyone, look for a retracement to the sweet spot. And notice, here's a sweet spot within a sweet spot, right? Last time we had a swing point high was over here when it slingshotted lower. So we got a high to a low, and I know it's overlapping with the other one, but you can see when this bounced and went right to the sweet spot. You can't make this stuff up. And it's the hook pattern that guarantees a high probability outcome as long as it hooks and stays up and you get across that you're going to grind toward the sweet spot. Yeah, and again, the only way you don't reach a sweet spot is if it slingshots down. And what we showed you was, I would know this weekly's getting ready to slingshot lower in advance before it starts. How do you know? Remember what we discussed. When you see this going higher and then ultimately turning over, how do I know it's going to depressurize to slingshot lower? Because the monthly was turning down and the weekly is expected to do what? Slingshot lower and lower and lower and lower. That's how, remember the saying, there's no way we can get down here the 126, 127 previous swing point low, we showed you off the monthly, without stair stepping, or other words, without slingshotting. So that's how it continues to stair step via those slingshots. But that's how, and how did I know this was going to rally? Because the time frames were oversold moving up. How did I know it was ready to engage? Because at that point, the daily was ready to turn over and start pushing lower. So we go through all that. I promise you, in class, not only, well, you say, well, Gary, I have a job. I won't be in your live class since I'm working. Well, we record it. But more than that, our live class is just not set on, hey, let's get in a trade, make some pips all day long. I set it up based on the time frame. So I tell you, this is going to take days to go higher or weeks to go higher. Then it's going to reverse. Whether it's 2 days from now, 2 months from now, when this reverses, that's when you want to sell, etc., etc. So what's the prognosis? This daily is going to force bond prices to climb a little higher towards what? We're going to use our Fibo swing point high to swing point low, and we expect it's going to go towards a 38.2 at least. Well, as long as it stays up, it's going to go to the 50. And if it stays up, it's going to go to 61.8 or higher, right? It's still going to go high. It's not going to break out to new highs, but I'm looking for a lower high and a lower low, aka another daily slingshot. You'll notice we tell you right there in class, sell the D1 slingshot. Sell that daily slingshot in the coming days. Well, when is this daily likely to slingshot lower like that weekly was to slingshot lower? Well, the weekly was the slingshot lower when the daily cycled from oversold to overbought, then cycled from overbought, started moving back to oversold, right? So when the daily went from oversold to overbought, then reversed from overbought to oversold, the weekly started engaging. Well, what about different time frame, lower time frames? Well, how did I know this 4-hour was going to slingshot lower? How did we have any insight that this was going to depressurize to slingshot lower? Well, same reason. Now we're talking a 4-hour slingshot. So what do we know left of the equation? The 1 hour, 30, etc. have to be oversold moving higher. And then in order for this 4-hour to turn back and engage down, we need the 1 hour, 30, etc. to move from overbought back to oversold. Notice to the left of the line, it's up. And to the right of the line, it's down. Go to the lower time frame. There's the 1 hour. The 30, you have to turn the auto scroll off and go back in time. But it's the same thing. Left of the line, it's up. Right of the line, it's moving down. So this is how we anticipate when to look for a formation of a slingshot, and then at what point do we expect it to end, and then engage down. So we talk about this. We'd say, well, if I want to buy a 4-hour slingshot it works, and that's something I'm interested in selling, this next 4-hour slingshot, then I can sell it when the 1 hour turns and hooks down. Remember what the hooks mean. If it hooks down, it means my 30 is going to go all the way to oversold, and the 1 hour is going to start pushing, which in turn has the ability to potentially force the 4-hour to engage. It's that simple. So when it says sell slingshot, I can set my automated trade management system and say don't do anything until it either tops and reverses and triggers lower, or it slingshots lower, and it would just stay going long and just sitting in the mode ready to go until it's ready. Then it automatically engages. So that's the reason we want to pay this forward. Yes, our service is worth the $49.97, no questions asked. That's why we give deals for occasionally to introduce people to our system and our service, and why we're basically giving it away almost for free. $100 a month for this exciting software, and in our live classes, amortized over 2 years. So what does that tell us? All we need is one of these trades, and it would pay for my annual subscription, and I would have a second year on the house if I sign up very quickly and not reach the 50-person limit. And what? You would have over almost 2 years, if not 2 years, to recoup not only your investment, but then make profit. And again, these trades are not wishful thinking, hope, and a prayer. They're a reality day in and day out. Thousands and thousands of trades over and over. I have reams, terabytes of screenshots of trades that go on forever and ever, and it's always the same. Alignment of the time frame. Either buy the slingshot, sell the slingshot, buy the trigger, buy the hook. And all that's been calculated that, in other words, this wouldn't go from flat to start turning up and moving unless that weekly was turning from oversold towards overbought. And even on a 5 and a 15-minuter, right? Even if you want to go down to the bottoms and scalp very quickly, all you have to do is line the time frames and look based on the cycle. My 15's depressurizing, trying to slingshot lower, a 30 is oversold, and a 1 hour is oversold. So what's that telling us about the pound odd right now? Short term, it's going to do a little chop, 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 up, down, sideways to upwards. But then it's going to continue to slingshot lower and lower and lower in the coming months. Why? Because the monthly is up. The weekly is turning over to slingshot higher. So sure, I do expect this to sideways to lower while the weekly's depressurizing. But then when a weekly is ready to slingshot up, I'm going to buy it and scale into that position. Well, when's a good time to buy it? When the 1 hour, the daily, because we're talking about a weekly, when the daily finishes this engage, disengage, moving to oversold, and when it bottoms and reverses and gives us a new hook, that's when we're going to buy it. So join us now, and you'll be able to get this new buy signal when it's available, and it's probably in the next couple of days. As we move into next week, we'll see this daily finish playing out, reverse, and then you can buy the pound odd and start to jump in on this multi-thousand pip trade. So we won't keep you all day, but this is just a little sampling. Again, we're proud of our service. We're unique. We don't come out with a new system every day or every week. I optimize the software on a continuous basis. The numbers keep changing because I keep optimizing and improving the software long term. And that's because we found that aware of its surroundings, so it improves the software's ability to perform the more you run it. And if you're so new to trading, you have no clue about trading, you can actually set the system to auto trade for you, and then you can analyze those automated trades to understand why it was a winner or why it was a potential loser based on the settings. Well, I will tell you, if you tell the trade management system to buy the dips in a downtrend, then you're more likely to have more losing trades than if you buy the dips in an uptrend. It's about the direction of the cycle, but that will show you based on the software, and just letting it run will teach you how to trade. How cool is that? So with that, I'll say good day, good luck, and God bless you. We hope those of you that have already joined us, remember to sign in on Tuesday for our market forecast class. And we have some more trades setting up for that Tuesday's time frame based on where we are in cycles. All right, so take care. God bless you. In closing, here's the link. We posted it for you. All you got to do is click on it. And remember, only the first 50 subscribers will get the second year free. And with that, take care. We'll see you next time.